Yo, yo, yo. Welcome back to the channel. Just wanted to do a quick update. No camera today. I got my eye is like red from my contact irritating it, so I don't want to be on the internet looking all crazy. Hopefully you understand. Obviously today FOMC occurred, something that we've been looking forward to for weeks now. Played a big role in the way that we were seeing the chart leading up to this moment. So figured I would provide an update on what I'm seeing, how I'm seeing the chart, talk about what we were looking for going in, so that I can pat myself on the back and say what I said that was right. And yeah, then we're gonna get out of here. It should be a pretty brief video though, relatively, because the plan is kind of the same. Going into this meeting yesterday, you were kind of in no man's land on the chart. So I said that, I didn't think that Powell was going to have this incredibly huge impact on the price when all was said and done. I didn't think that you were going to go to the moon. I didn't think that you were going to go to hell. And you didn't really, right? You closed only down 0.64%. And FOMC was relatively hawkish, I'd say. And futures now is only at 0.44%. So I'd say that is a very mild percentage change for this sort of market event. So we were accurate there. And one of the scenarios that we talked about, I know that we talked about on the video yesterday, is sort of playing out here, where you're having a confluence of this purple downtrend and the green uptrend, which held. This is the green uptrend we've been watching. You see it held here as support. You didn't break through it on this Powell speech. And you're holding this downtrend as support now as a retest. So I think it's actually pretty likely here that you see a buildup for bullish continuation, and you could even go to new highs. But that's actually, no, I don't think you can go to new highs. This downtrend apparently changed based on the time frame that I drew it. Let's see. I mean, you could have a move like this. Maybe that would be like a double top, not new highs. Yeah, or maybe it looks like it's actually lower. That's actually a really good drawing of the downtrend. But yeah, so looking for a double toppy sort of move, kind of a build up to it. From there, obviously, I'm not gonna I would be playing the short side here. I'll play the long side up until this. I'd be looking for the short side, but if you break out, and then especially if you hold as support, then I'm definitely not looking for short side opportunity. I'm definitely looking for long side opportunity until you get to another line of resistance, because I just feel like, shorting a breakout just isn't a good idea, generally speaking. But I am more expecting you to get rejected here and then retrace and then eventually break out down and out of this range. And then eventually this looking like a distribution, taking you down to between $366 and $380 on SPY. The way that we got this price target is by drawing this Fibonacci up here from the bottom of the bottom in October to the recent top that we've had. And the 0.5 to the 707 range has been the most relevant range. 0.5 being a more bullish case. So if you hold this as support, then you probably are going to go right back up and retest, which I actually think is a relative likelihood, because you've seen a change in behavior already in the market. Back here, when you didn't come back, when you didn't come back and retest this green support trend down here. So I wouldn't be surprised by the retracement actually being relatively shallow. You not going back to test the macro midline that we've been watching, and perhaps turning around and breaking this downtrend. So I do think that is a great possibility, that you see that change of behavior there, just like you saw it back here, and you get that ultimate reversal. So that's pretty much what I'm looking for. Let's see. If it happens really fast, then by the end of the month, you could get down to 380. Here for this confluence of this downtrend being tapped again here. That would be a really interesting turn of events. Maybe it wouldn't be so dragged out. Maybe you would get a hard rejection down here in this way. But then you could still retrace right, and continue here before you reaccumulate to eventually try the downtrend again. So that's basically how I'm looking at the market right now. So short term, relatively bullish, unless you break the break below the uptrend, then I turn bearish. And then in the midterm, probably few weeks from now, a week or two from now, I will be shifting more bearish, most likely, if things go the way that we think that they will. And then from there, we'll see the test of this uptrend again. I think that point, you're pretty likely to break down and through it. The estimated time here is, the apex of this is December 30th. So this will happen within the next 2 or 3 weeks. We'll have more information. And once you break through here, I'm definitely very bearish until you test this 380. This would be like a profit-taking zone for me. Probably see a bounce there. And then if you can hold it as support and then make new highs, right? So what that would look like is maybe you have this bounce, this sort of relief bounce, and then you break new highs here. This is a really bullish signal. This is a really good sign that you might actually have a chance to break through here. And then if you get rejected and you make new lows, then you would go down to your 707 most likely, which is, again, at $367, $366. So that is just a brief summary of how I'm seeing the market at the moment. Hopefully you learned something. Hopefully you enjoyed the video. I am going to go handle some other business, and until next time, peace. Oh.